Good morning, everyone, and welcome to the European crossover webinar. And we just got Eurozone PMI that just came out at 39.4. They're looking for 39.5, and part of that we got German, which came in pretty much in line with what they're looking for, 36.6. And prior to that, we had French at 40.6 and Italian at 45.4. We will get at the bottom of the hour, we will get PMI, UK PMI. The Reuters polls for 40. And then as we roll into the States, we'll get market PMI at 9:45 Eastern, construction spending, ISM manufacturing PMI, and ISM employment and new orders. Those will be at 10 a.m. Eastern. And we are seeing the SPU still holding up rather well. Surprisingly, I would have thought we would seen somewhat weaker. I was able to get a short off in Asia, 30.44, and I covered that. I think it was at either 35 or 36. But I thought we were actually going to go in and break even lower than that, actually. So I was a bit disappointed. I thought I was going to be able to get to cover that around 29, but still was pretty good fill. I think it was, like I said, I think it was 35 or 36, one of the two, anyway, running here. I actually had two. One I covered at I think 35, and the other one I got stopped on the first pullback, I guess it was. I think at 40 and a half or something like that. But anyway, I thought about taking a short here, but I'll just wait until I get for sure. I mean, it seems like it's kind of topping a little bit here, but haven't got anything to say, okay, this is it right here, and then try and write the thing down. But I'm surprised that, despite all the issues we're encountering here in the U.S., that it's actually holding up so well. Let's see, you can hear in the daily, we're still holding well up here. And obviously down here, we've got the 200-day moving average at 29.94, so it's well above that. And would be huge if we got above 30.58. But you can see here we're starting to pare back just a little bit here. So, but it's still early to say that we've had got an outright signal, because even if you look at the momentum here, they're using. I switched them to a 10-minute. I usually use a 30-minute, but it's based off the 30 minutes, so it's using the same composition. And obviously it's on a buy signal right here, and we did get above this 30.48 here, which was key. And then but we haven't been able to do anything with it. So if we break below here, that'll be key here. If we can get below here, stay, sustain and move below that, that'll give us a sell signal. But we have to do that. So. Looking at the Dow, same similar situation, still holding up rather well. And same thing here with the Russell. Also, the Nasdaq's holding up very well here too. So you can see here on the 30-minute, still, straight up buy signal here. So nothing. We'd have to go in and break below this area here and sustain it. Sustain price action below here in order for us to go and say, okay, now we're starting to fail. But like I said, I'm still surprised. We'll see what happens here in the U.S. session when we open up. And moving over here to FX, you can see here the euro's still trading pretty firm here. And the dollar's come into a pretty key area here, this 99, 97.89. But really with everything that's going on in the US, I just, if the S&Ps were to fade, we may see a temporary move into the dollar, but I don't believe it's going to hold. I think the safer bet would be just to move into the euro. Obviously, the Swiss franc, but move into the euro. I would think. As far as for a sustained move that hold overall. Obviously, we're seeing also look how weak the dollar cat is. And cable pushing hard too. And just take a look at some news. Aussie dollar surges as investors focus on recovery from pandemic. Riskier currencies rose against the dollar on Monday as investors looked at positive signs from China's post-coronavirus economic recovery and wagered on an easing in Sino-U.S. tensions. The trade-sensitive Aussie dollar surged 1% to a three-month high at 67.42 to lead the broader gains that put the dollar close to an 11-week low against a basket of currencies. Trump made no move to impose new tariffs on China during a news conference on Friday where he outlined his response to Beijing's tightening grip over Hong Kong. That removed near-term risk on any intensification of the U.S.-China trade war. Moreover, investors were encouraged by the Caixin Market Purchasing Managers Index showing marginal but unexpected improvement in Chinese factory activity last month. The Kiwi rose about 0.5%, along with the pound and Canadian dollar against a basket of currencies. The market move was notable given major U.S. cities were bracing for another night of violence as demonstrations against police brutality turned into a wave of outrage. Analysts said the unrest was concerning and perhaps pointed to a close run in the presidential election. China to halt some U.S. soy imports as tensions increase. So now we're seeing that. Now we're seeing that dip now here and we're really breaking pretty hard now in the S&Ps down to 34, 30, 33. So it looks like we're really starting to pick up in here on that dip. Like I mentioned to y'all, China halting some soy imports. So there's your first real salvo. So so China now telling some companies to halt up purchases of soy products, some certain soy products. Oh, China's also canceled unspecified number of pork orders too. So we're really coming undue on the S&Ps now. We're 30.34 now, so we're really getting a pretty good little dip here. We can take a quick look there. And you can see right there, we were already kind of dipping a little bit. Now we got that move and drop right down there. And there was that dip down here at 30.33. When I was short in Asia, that's what I was really looking for. I thought we were going to break into this area. That was my first area that I really wanted to come in and buy. And then we jumped back up. I think it was here where I got stopped on one of them. And then the next one, I said, you know what, they're kind of holding here. And I ended up jumping out. I think it was around 35. I thought maybe it was 36. But anyway, but this is where I thought we'd take that dip down to 33. So China halting there's your first thing. They're taking some action themselves. They're really heightening it. So we'll see how much further we break. The next level really comes in. You can see here about 27-ish or whatever. So we'll see. But we're starting to. That's really throws in a major hit there at this point. And I don't know. We could see an escalation because at that point, then Trump may want to take action, and then it's just going to be one after another after another. And but we're trying to doing that because you've gone from remember when they did that, the big trade deal, which was a big farce to say the least. China was supposed to buy a lot, and China has not been buying a lot. And if you see last week, I was even showing here with China, that Brazil had really picked up the gains, and while the U.S. had actually gone in reverse and dipped lower. So now, probably Brazil soybeans are probably off the market. I mean, out of this world, probably going limit up or something. I don't follow Brazilian soybeans, but I'm sure they are. But now, like I said, now with them doing that, China's gone in reverse. Instead of they're supposed to buy more, now they're going the other direction, and now they're halting. Uh, So we've already dipped down to 31 right now. And I was actually just posting something here because I remember when Trump on Twitter was posting when he said the U.S. is going to farmers are going to have to buy bigger tractors because they're going to get all these big increases. And now we've gone from losing to now they're halting. So you're really this is more about, like I said, what you're seeing in equity markets is more about this really starting to spin. I wouldn't say spin out of control, but now you're really going to see, and this is not bullish at all. If you look on that, they've been trying to hang their hat on this. And once again, like I said, I almost took a short right up in here, but now I'll just wait until, like I said, I see a little bit more definitive action. But we're seeing that now as we get below. You can see this 30.48. Once we jumped above it, you see there, and actually jump is you can see right there we jumped up, and obviously that popped some stops in here, and we hung there. Now we're here. Now this is about really kicking it upstairs, and you know. We should see, this is really changes everything. And now you look at potentially a true trade war, and that spins everything, puts everything on its head. Because, with everything that's going on in the U.S., you tell me how the Fed's going to print themselves out of that. It's not going to. And on top of that, uh, not only that, can you imagine the amount of money it's going to take to put everything back together? Not to mention all the businesses that were damaged, and the ongoing part of the coronavirus. So, what this market is doing way the heck up here is beyond me. So, my guess would be first test is going to be that 200-day moving average at 29.94. But like I say, because right now it's not a matter of just one dip, it's really more about escalating China war. And don't forget, it's Trump's own. One of the reasons he's given so much attention to farmers now is because he needs that area to uh, to provide that support for the election. He's not going to be able to get that. So now, with all this thing that's gone on, it's just really starting to spin out of control for him. And they'll see whether he may his nature is to, you can see right here, here's some support coming in. That's what I like that area for support. His nature would be to go on and flip right back and go right back at him. and it's just going to increase it. And next thing you know, like I said, we'll be testing 29.94. But that 30.48, that was key right there. If you lose that 30.48, very key. 30.38 is key itself, uh, which was an area I was looking at initially when I shorted in Asia. I thought, well, let's see if we can press down 30.33. But it's this third. But you can see here, it's this 30.48 that was key. It was key before, it was key on Friday. You can see here now we're pressing here, and we're going to be pressing into some support. You'd be looking at around 27 to 23 and a half. That was another area, which they paused on Sunday afternoon on the way down, and then they went further. Then they came back up, tested and challenged it. I was scalping a little bit in Asia. But so anyway, let's go on. We'll move on and cover the rest of the news. Actually, I can keep it on here if you want while we cover some other news. But this is supporting here. This is supporting. Right there. Okay, Italy factory activity contracts by less than expected in May. Italian manufacturing activity shrank in May for the 20th month running, but not much less steeply more than the month before, a survey showed on Monday, as Italy emerged from its lockdown. Purchasing Managers Index rebounded to 45 from 31.1 in April, remaining well below the 50 mark, and data was considerably less weak than expected. April's reading was the lowest since the ISS market launched its survey in 1997. And I won't spend too much time because we'll get into the analysis. There was one other story regarding JGB yields. Super long JGB yields rise after the BOJ steady buying operation. Super long Japanese government bonds edged lower on Monday after the Bank of Japan conducted regular buying operations, with both the 30 and 40-year JGB yields reaching or hitting one-year highs. The BOJ maintained the size of its JGB purchase option and bought bonds of 1 to 3-year maturities. Benchmark 10-year JGB futures fell 3/10 to 52.17 with trading volume at 13,661. You can see here, look how we're starting to accelerate here. And I'm just keeping it on here, but the next area is like this 30.23, but you can see here, we're just continuing just to move lower here. We are coming into, you see here, this chocolate brown line, that's the 2-day VWAP. So you may see a little bit of support. Once again, remember I mentioned about the 24, so and then that was an area also of some support initially, and it was in Asia, but it was a resistance area on the way up late Friday afternoon, and then we moved higher and challenged at 30.32. So like I said, we're starting to slide back in here. And at this point now, try and establish some shorts at really this 30.30. Actually, now it's going to be 30.38 is the best, realistically going to be the best to probably be able to go, even go and do so. Any bounce backs, one going in, it'll be, from a technical standpoint, be a shorting opportunity. At this point, you can see here, we are really losing because it's a different ball game now that China did that, because it's increasing the actual trade war. The stock market isn't about soybeans, but it increases the trade war now. And now I'm sure Trump will want to slap back on them. So they've really changed the game here at this point. And they're really, honestly, from a political standpoint, they're really turning the screws on Trump. They didn't even have to do that. With everything that's going on domestically, doing that to him, boy, they're really putting, putting the knife in and sticking it in and turning it. Let's go back into the FX to do the analysis. Okay, and UK data is going to be coming up in about 10 minutes. Um, and moving on. So it says the euro finished a solid week of gains at 111. Key resistance is going to be 1132, followed by 1166. Looks like we almost made it to 66, which is a 61%. Confluence with 1171, you can see the 1171 there. Support is going to be 1060. So we're going to go with the 1171, which is just above this 66, still just a little bit higher, but we'll go with 1171 for resistance. And support, I put for 1060. Yeah, the 10, I want to give it a little bit of raw room. 132, 1077. We'll go. All right. Right there, 1067. And let's go now to the table. Now we're down to the 3023 and a half. So they're really pressing this sucker for all she's worth. Some resistance, not some resistance, I mean some support at 3020 and 3/4. They hammered this sucker pretty good too. We may get as low as 3029, but this is 3019. I mean, but this is pretty good low right here. And let's go move into the cable. We're not even seeing much of a bounce at all. That's really flipped the script on this. The cable closed slightly closed at the best levels of the week. Bulls will attempt to push the pair higher. Resistance comes in at 24.29 with support at 22.48. So 22.49. Support 22.48. And let's go move into the Aussie. So the Aussie continued to push higher into key resistance at 66.80. Resistance to start the week will be 67.04. We even blew past that. It's just plain nuts, man. I couldn't believe this. But a lot of it had to do with these spoos just, kept on going higher, and I thought it was just plain nuts. So there's some good support here. If you look on the spoos at 30.15, so if we take a dip down there, we should see a good little bounce around 30. If we really hit hit the thing, go overboard, 30.15. This thing really pushed higher. Here's a resistance level there, 67.61. This is just plain nuts, but that's the level, and it did hit that. Although I just don't see this moving much higher, but 67.61. And let's see. And support right there. It's going to be 66.15. Now let's go to the Kiwi. Yeah, they held so far. They held that support right there, just at 30.20 3/4. They had a pink line there. I think they may even, although that's pretty well off the highs. They might have really come down, tagged down there at 15. On the Kiwi posted a spinning top doji. You can see here, spinning top doji here, closing at the weekly level of 62.05. The pair is vulnerable to a pullback. Resistance will be 62.68, and they made it up to 62.64. So 62.68 did hold. With support of 61.37. Let's go on and move into the CAD. The dollar CAD is attempting to make a stand above 37. Downside appears limited for now, but that's what I said then. But like I said, with all this action that's coming across the states, the dollar is just not the place to be. I think even if the S&P sell off, we may see a knee-jerk reaction to buy the dollar, but overall long term, I don't think people are going to, I mean, long term, but I mean, people are not going to want to be in dollars. It just doesn't make any sense. So, like I said, if equities sell off, we probably will see a knee-jerk reaction to the dollar, but I don't think it won't be sustained. UK data out in just a moment. So support will go right there with that level there, which would be 36.84. You can see right here, this high, this open right here. You see some confluence here. That comes in at 36.91. Okay. $40.7 for UK PMI. And resistance is going to be right there. 38.24. That might be a real stretch to get all the way up there. As much trouble the dollar's in. right there, 38.20. That might be a bit of a stretch to go through. 38.20. And moving into the dollar peso. So Reuters is running the story with China halting some imports. So I just don't see it on my feed, but I might have to pull up my agricultural, and I don't even look at agricultural feeds. I'm just checking my Reuters feed right now. Yeah, I'd have to pull up one of the agricultural headlines. I'm not seeing it here. No, I don't see it at this time, but nope, not this time, but I have to check one of the other feeds. Okay, so let's go on and move into the dollar peso. Dollar peso bears appear to have reached a stall point. Support remains 21.89 with resistance at 22.50, followed by 22.85. So we'll stay with the 21.89 and 22.50. So no change there. And I'm still looking, but I'm just only checking my main screen headline for that Chinese story. I don't want to flip onto the agricultural thing because I don't even think I have it set up very well. So I think that one of the pages might even jump up on this screen. So let's go on and move into the dollar yen. Still looking if it pops up on the financial side, which I guess it wouldn't necessarily pop up in the financial side for soybeans. So dollar yen pressed the downside on Friday, but recovered to close at resistance level of 778. Resistance to start the week will be 804 with support at 705. And support's going to be 705. I'm still kind of looking over here. I don't want to I have the thing for agriculture. I just don't want to mess around with that. I don't have the pages set up and they're going to jump all over the place. I probably just better leave it alone. Let me go on moving to cash dollar index. But I'm curious to see that story. I'm moving on to the cash dollar index. The dollar index pressed lower to end the week, challenging by the key level of 97.89. before rebounding above 98. Resistance will be 98.57 with support at 98.06. Well, obviously, with all the turmoil that's going on in the U.S. and it's continued to exacerbate, we're pressing here. So I'll just go with the 97.89 here, that key area here, because things just continue to worsen. I did my analysis very early on Sunday morning. Things have changed since then. And on the upside, just going with the level, which is going to be 98.43. That's bearish now. Now let's go move into the cross rates. So the Kiwi yen eked out a new high for the week, but has not been able to muster a move above 67.18. Resistance to start the week will be 67.18 with support at 66.39. So 67.18. With support at 66.39. And let's go into the euro yen. So the euro yen culminated the week with a sharp rally, challenging key level 1975. Resistance will be 1998. Looks like we went right there to 1998. And 1997.7. It will be 1998 with support at 1925. So support 1925. And let's go to the euro one. Euro odd found some buying to push to new lows, to push to new 2-week highs, but remains solidly bearish. Resistance will be 67.54 with support at 66.10. Well, heck, we even dropped even lower. Look at that, because the Aussie was going all bananas. So support, we'll go with the open here right there, which is 65.02. And Resistance is going to be the day's high, which is going to be 67.06. And let's go move into the Euro Kiwi. So the Euro Kiwi found 3 days of short covering, although the pair was unable to take out 80 cents. Resistance to start the week will be the 80 cents, followed by 80.41. Support will be 77.98. The problem is, remember I said we started the week with the Euro and the Kiwi on a bang. So you can see here, so support would be right there. You see the close here and the open, that would be support, which is just underneath the day's lows, which I think that's going to hold now with equities now falling back. Will be 77.88, called 77.89. We had 77.84 on Friday, so. And resistance would then be right here. You see this open here is just above Friday's high, so it could be 79.93. And on to the LCM. So the LCM pushed to new highs for the week following the risk closing at resistance of 71.85. Resistance will be found at a solid 72.50. Well, we look how high we made it to 72.83. Holy smokes, but 72.50 is what we had. We said it was solid, so 72.50. We supported 70.92. And let's now move into the guppy. Guppy closed at its best levels for the week as the bears began to relent. Resistance will be 33.84. We supported 31.98. And lastly, we'll go to Sterling Odd. Sterling Odd on Friday challenged the key level of 86.55 before relenting, closing below Thursday's close. Support will be 84.33. We can see here, once again, because the odd blew out, it really knocked some people right out. So really support would be below that 84.33. We're just barely hanging on to the 84.33. But like I said, I think this Aussie went as far as it can go. But you can see this bar right here. We go with that for support. So that is 83.48, which I think may have come in around that price anyway, but 83.48. And resistance can be just that bar right here. You see right there? 85.65. And that'll take care of the analysis here with FX. We can just take one last look at the equities. And you can see here, they did try and make a run up here. Good resistance is going to be this right here. You see how much traded right there. That's actually now that's VWAP, which have been right there at 30.35. You see the traded right there. But that'll be it. But thanks for joining us here on the webinar, and we'll see you in the chat room.